And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, advancing Red Rocket's ambitions with Discovery Green as the off-taker to power Africa's future through affordable, renewable energy. Good evening. Welcome to the program. I'm Stephen Grootes. 9 minutes after 6 the time. If you had to think of a top kind of iconic South African television show, in other words, one made here, what do you immediately think of? I mean, do you think of Pumpkin Patch? Do you think of something else? What do you immediately think of? Muvhango would be one, I think. But somewhere right near the top, and probably at the top, the one that you've probably spoken about more to your friends and family than anyone else, is Top Billing. I mean, there was a time when your wedding was nothing if it wasn't on Top Billing. You know, then you just hadn't succeeded, doll. You just were nowhere. And Top Billing is coming back. We'll talk more about it in an hour's time. But Top Billing is now coming back. I don't know how triumphantly it's coming back, but the SABC has, I think, done the right thing. It was one of the big properties that they owned. It was one of the big name properties that they owned in television. And it's coming back. People like to see themselves. It really is as simple as that. So much talk all through the day about the news that broke while we were on air last night. The Please Call Me saga finally coming to an end. In Nkosana Makate versus Vodacom. It was a real sort of David and Goliath thing. So many elements that I think brought so many, made it so interesting. Partly it was also because the legal battles just went on and on and on. Duncan McLeod's been looking at it for a long time. We'll hear from him in just a second. So often we talk about water infrastructure in South Africa. How are we going to fund more water infrastructure? And according to Futuregrowth Asset Management, the issue is not, is there enough money? There's enough money. The issue is are projects bankable? To put it another way, would you put your pension money into a project that is going to create water infrastructure? Think of all the role players involved. Government, local government, the people who actually have to do it. All of the problems with, for example, that we see time and time again with the construction mafia, things like that. That's what we're going to be looking at this evening in about 10 minutes' time. I was fascinated by an interview that Dan Marakane did. He's the Eskom CEO, of course, and done incredibly well there, along with Mteto Nyati. But an interview he did with Business Live, he was talking about electricity for smelters. I know lots of people have been talking about this, but if we don't get the pricing right, smelters are never going to come back. And the only way to get the smelting right, the prices right, is basically if you subsidize the smelters, which would mean that you are subsidizing a private company. I'm not convinced the vast majority of people would want to do that, frankly. We'll look at the SA Future Trust. We're expecting a winner from the summit in the next little while. And, of course, the latest on TikTok. Siphumelele Zondi has been looking at that this evening. Good to hear from you. 011 883 0702 021 446 0567. And, of course, voice notes tonight on 072 702 1702. Just my question to you, really, and it's the end, finally, of the Please Call Me saga. How much money do you think Nkosana Makate should be getting? Hundreds of millions? $1 billion? What do you think he should be getting for the idea? Bear in mind, he was employed at Vodacom when he had the idea. He was an accountant, sure, but he was working for them. Your thoughts? 12 minutes after 6.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, the backstory to the Makate case, the Please Call Me case, is a sort of South African legend. He was working as an accountant at Vodacom. He says he had the idea. He mentioned it to his bosses. They adopted it. They refused to pay him for it, despite a sort of verbal agreement. Court cases have been going on ever since. Fin24, in fact, calculating today that Makate might well get between 350 million and 700 million rand. It's calculated that through the interim result forecast that Vodacom has issued. Duncan McLeod is the founder and editor at Tech Central. And Duncan, I imagine this court case is probably, I don't know, older than your and my careers. Good evening. It's been going on for a long time. Even for a cell phone network, we're talking hundreds of millions of rand. It's a lot of money. Do you think Vodacom just wanted this to be over?
Yeah, I think so. It's been dragging out for so long. The figure I'd love to see is not so much Makate's payout, but how much Vodacom spent on lawyers through this whole process.
Yes.
It must be a huge amount of money too. And yeah, it has been going on a very long time. I was just trying to think whether this has been going on longer or whether it's been South Africa's migration from analog to digital television that's taken longer. I think it's the TV migration, but this has certainly been been one of those ones that has just dragged through the courts. It went to the High Court, to the Supreme Court of Appeal, to the Constitutional Court, then back to the High Court, the Supreme Court of Appeal, and back to the Constitutional Court. I don't know of any other case where that's happened, and was then referred back again to the Supreme Court of Appeal, which would have been the third time that court heard it. But now that they've reached an out-of-court settlement, and of course the Supreme Court was due to hear the case in just 2 weeks from now, so there was obviously a lot of discussion going on behind the scenes, and they've now reached an agreement, and that court case will not proceed in 2 weeks' time.
I mean, you talk about Vodacom's legal bills. I would imagine Makate has the highest legal bills of any individual South African in history, and I'd include a former president in that, by the way, but no matter. Makate had lawyers, and he had funding, and won't he face not just a legal bill, but I'm not quite sure how it worked, but I got the impression at one point that perhaps people had sort of bought a piece of his legal action. I mean, that kind of thing was new too.
Yeah, I don't have the detail on that, but my understanding was his legal team were doing this on the basis that they would share a percentage of the proceeds if there was ever a favourable outcome for Makate, and that he wasn't paying their legal fees on a daily sort of basis. That they were doing this work on the assumption that they would get a payday at some point. But I don't have any detail on that or what sort of percentage the lawyers might have taken from this. But certainly I think the outcome of this is that the first thing that's happening is Makate is going to hand over a big chunk of money to some lawyers.
There's a bit of a more complicated backstory. So the legend, and I did sort of use that word, and I'm going to stick to it for the moment, but the legend is kind of Makate was an accountant. He worked at Vodacom, had the idea, mentioned it to his bosses, was told to speak to a particular person who, in fact, was on the board of Vodacom. There was a verbal agreement. Vodacom reneged. That's where the court case started, right? But as I understand it, and Duncan, you'll know this history far better than I, there's no patents from Makate, but there is one from MTN from a person called Ari Khan.
That's right. Yeah, that's the other angle to this whole story. Ari Khan was a contractor working for MTN at the time, and he'd come up with a "please call me" idea. And he had it patented about a month. I forget. This is such old stuff now. Maybe getting the timeline slightly wrong, but I think it was about a month before Makate came out with announced his idea to the team at Vodacom. Ari Khan, who was working for MTN as a contractor, had not only come up with an idea for a "please call me" type service, but in fact patented it through MTN. MTN, as far as I can remember, decided not to pursue any claims against Vodacom, despite the fact that they were implementing the "please call me" technology, which MTN had effectively patented. But yeah, it looks, and certainly Ari Khan claims, that he is the rightful inventor of a "please call me," and that he has the paperwork to prove it, and that Makate was a Johnny-come-lately.
There's another angle to all of this, and we talk about AI technology all the time at the moment. Don't worry, Duncan, I'm going somewhere here. And we talk about how much money you can make if you get into the right thing at the right time. Now, one of the precedents for that is cell phones in South Africa and the adoption of "please call me," because that, I think on all versions, was one of the, call it an invention, call it a patent, call it an idea, call it a whatever, but it was taken up probably more quickly than any other kind of idea, maybe even in South African history.
It certainly proved very successful for the mobile operators, not just Vodacom, but MTN and the others as well. And it was exported. It became a model around the world, in fact. I think a lot of people were tinkering with this idea at the time, and it's possible people in other markets around the world were also experimenting with the idea of "please call me." But certainly the most sort of strongest early indications of this concept appears to have come out of South Africa, and there's no doubt it's made billions and billions and billions of rand for mobile operators in South Africa and for operators around the world, in prepaid markets particularly, where consumers can't afford to make a phone call and they want someone to call them back.
And life has changed so much. Now you would just do it on WhatsApp, wouldn't you? I mean, the whole idea has almost fallen away.
Indeed, although you do need an active data connection with WhatsApp, and many people don't have that. So I think Please Call Me is still to this day, despite the rise of voice over internet calling, Please Call Me is still a very popular service.
Duncan McLeod, really appreciate that. Thank you very much indeed. Bit of a deep dive into the history there, the founder and editor at Tech Central. While he and I have been talking, some of your WhatsApps coming through. Matthijs saying, Makate rightfully should have received, he's given me a lot of digits here, 0.00000000.00 rand. If my employer paid me for each of my bright ideas, I'd be a billionaire. But I'm not. You use the word entitled. You go on to say he's shameless. Andrew says you should get nothing unless there's cast iron proof of a valid verbal contract. It sets a dangerous precedent. Employees have ideas every second of every day. Interesting point so far. You might well go the other way. 072 702 1702.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
A suggestion from Futuregrowth Asset Management that one of the real problems in developing our water infrastructure is not a lack of money or capital. It's really a lack of projects that are bankable. And I suppose what we're talking about is whether you would put your money into a water project. I don't need to remind you of the dire need we have for water infrastructure in South Africa. Jason Lightfoot is a senior portfolio manager at the Futuregrowth Asset Management. Jason, good evening. You say a shortage of projects that are bankable. What do you mean? Do you mean, let me put this politely, there's a shortage of projects where you can actually trust you'll get your money back?
Correct. Thank you, Stephen. Thanks very much for having me. It's great to be on your show. So I think before we get there, there's really two aspects that are converging. We've seen worsening infrastructure from a water point of view, aging infrastructure, poor maintenance, limited municipal capacity coming through, particularly in Joburg. And secondly, more recently, we've seen the introduction of some innovative finance solutions such as blue bonds, for example, blended finance. And ultimately, what we're trying to make clear is that the constraints aren't really around capital, it's around the bankability theme. And what do we mean by bankability? It's really around ensuring that projects meet requirements that allow institutional investors with fiduciary responsibilities to be able to deploy capital. And we've got 9 of those that apply. So it's things like regulatory certainty, policy alignment, robust legal agreements, alignment of interest, fit for purpose projects, and obviously some recourse mechanisms as well, and therefore ensuring that there are cash flows that are able to meet the debt requirements. So if we look at prior examples, the Renewable Energy Program was a great success. We've had about 250 billion rand that was deployed over a 13-year period with about 0 defaults.
And that was private capital, right? Yes, the end client was largely Eskom, but it was private companies. Is the issue with water that it's not private companies, it's government entities and often local government entities?
To some degree, that is correct. You need to ensure that the underlying off-takers are sound. And ultimately, if you look at from a water point of view, the municipalities are involved there. And obviously, we all know that differentiation is critical here. Not all municipalities are created equal. Obviously, I'm not going to name and shame, but some are better than others. Where we need to then create a scenario where we leverage off the bankability theme to ensure that those ideals are met, to ensure that you can ultimately provide funding from a retirement fund.
You suggest there needs to be proper risk sharing. What do you mean by that? What creates a bankable project then? It obviously means that someone else needs to be at risk of losing something.
So ultimately, it's not a case of that, the only lenders are going to take the pain if something goes wrong. So you need proper risk alignment between, ultimately government can play a role by providing guarantees as an example, but risk sharing between both debt holders and equity funders in a scenario like that.
Would it help, Jason? This is probably impossible to do in the current context, although I'm aware of one sort of privately owned water network. I think in KZN, someone emailed me once and said there's another one in Gauteng. But I would imagine that would be a good place for sort of, a couple of practice runs at this. You really would be looking for projects that you can make a long-term profit on, and the need for the capital is so obvious.
Yeah, I think from a water point of view, it's not necessarily just a private sector issue. We are part of the solution, but not the entire solution. So if you think about it, municipal water infrastructure requires multiple funding sources. So national grants, as an example, municipal own revenue solutions, development finance institutions, and obviously some commercial returns coming through as well. So each player does have a role to play. But ultimately, as lenders, we need to ensure that we achieve commercial returns for the loans that we are providing.
One of the things about the Independent Power Producers Program and the way that was run was there was a very specific office, and people had, it seems, very high regard for the people running that office. There are people who have very high regard for the people who run Operation Vulindlela, for example. Could there be the creation of a government entity run by people that you trusted, essentially, that capital trusted, and that would go some way to helping? In other words, the names of the people involved really do matter here.
No, that's very much so. Obviously, Operation Vulindlela Phase 2 has done a great thing. Obviously, now with water being one of their key priorities and focus areas. And we do see some legislative reforms coming through, the Water Services Amendment Bill being introduced, and NRIA as well in terms of driving reform through in those areas. But yeah, we definitely will likely see some form of private sector involvement at some point.
Jason Lightfoot, really appreciate the time. Thank you. Senior Portfolio Manager at Futuregrowth Asset Management. 25 minutes after 6.
The Money Show.
The Markets.
Norman McKechnie is an independent investor. Norman, good evening. Quite a few updates today. Let's start with Truworths. It seemed that the South African market not growing very much.
Yeah, I think that's right, Stephen. I think if one looks at it, it was certainly a weak trading update. The sales Africa SA were down sort of 4%. Credit and cash sales were also weak. I think they've adopted a more cautious approach. But yeah, it's probably a reflection of the Truworths customer being under pressure, and Truworths obviously looking to scale back some of the account sales. But the UK was reasonably positive. But yeah, sort of net, I think it is a reflection of just where the consumer is in SA.
It's an interesting decision to actually tighten your credit requirements. Clearly they felt they needed to do that, and they would have known that this would be the consequence.
Yeah, I think absolutely. I think although what they also did do, which is probably a reflection of them looking at their credit sales, is their overdue accounts improved. So they obviously, it looks like they put in more discipline there in terms of what they addressed within the business with regard to new accounts, etc.
Motors having a very strong day. They also had an update. New car sales are up?
They are. Again, what's interesting is this probably is another segment in terms of the SA consumer. Obviously, well, I think what you've seen is a lot of the imports that have coming in are coming in at fairly competitive prices. We saw new car sales up there, up 20%. I think that was in line with the market. Used car sales were also growing. The car rental business was probably in line. Again, they've got UK businesses, as has Truworths, and the retail side was positive. After sales were good. They have a heavy vehicle component to their business, and that actually came under some pressure. And then Aussie was probably in the used car area was better than expected. So yeah, net doing reasonably well if one looks at the exposure to consumers in all three of those geographies.
It's interesting. We spoke to the We Buy Car CEO last week. They had a bad outlook. You may recall that their share price dropped dramatically last week before. Right. And they seemed to say that, yes, people were buying cheaper, new Chinese models rather than second-hand cars.
Yeah, I think that's right. I think what people, the prices are pretty competitive, and I think people have looked at that and said, well, we'd rather pay a little bit more. Get a new car than a second-hand car, and I think that's probably put the second-hand car market under a bit of pressure, and that's clearly where We Buy Cars are exposed.
Sappi, a complicated update, and quite a strange impact on the share price. So they made a big loss. They did say that the near term is going to be tough. Their share price shot up this morning and then dropped back today.
Yes, it did. I think if one looks at it, I think clearly what they said, there were trade tensions, lower selling prices. They did gain some market share in Europe, which is positive. But I think in essence, prices coming under pressure. They have made a loss. I think they made about $115 US. They're now down almost sort of 80% of that at $83 million loss. Yeah, I think sort of net, but the market must be looking for what is probably a bottom, whether that is likely to occur. We've seen interest rates being cut in Europe, and maybe that's what the market is looking through, because the market does tend to discount the next year. But I think we're still probably in a bottom area, and maybe the anticipation is a little bit early. We've seen that before with SAPI, but certainly demand remains under pressure, and I think that must be some cause for concern.
And then First Rand were down slightly today. They gave an update suggesting that they might actually have to raise the provision for what happened in the UK. This is the sort of car mis-selling issue that they were exposed to.
That's right.
It's been going on for a very long time. They would not have been very happy with this.
No, certainly. I think that Aldermore acquisition, they did basically, I think if one looks at what they raised as provisions, there were two lots of provisions. The last one, I think, was in September, and that was 2.7 billion. The total is 5 billion, and they look like they probably have to increase that further. Essentially what we had was the failure to disclose the commission on motor finance in the UK, and they've decided that the total bill will come to about 700 pounds per customer, the average that will be paid back, and the total bill is about 8.2 billion. That's for all financial companies in the UK, and clearly Aldermore, which is part of First Rand, has a slice of that. So it looks like they'll have to add to that provision. That certainly is the current feeling in the market.
Norman McKechnie, thanks so much, independent investor.
WhatsApp Stephen
on 072
702
1702.
Well, a couple of notes coming through about the Please Call Me issue, but others coming through about what's going to be, I suspect, the big policy issue of the next couple of weeks, how we should really fund electricity for smelters.
Stephen, John here from Randburg. I really believe that the subsidizing of electricity prices for smelters should come out of government coffers, because they are essentially subsidizing jobs, which boost the economy. So it shouldn't come out of consumers' pockets.
All right, John in Randburg, thanks very much indeed. The Eskom CEO, Dan Marakane, he gave an interview to Business Live. He says the cost of preference electricity prices for chrome smelters would have to be borne by ordinary customers. He means you and I. And that a preferential pricing policy should be explicit about who it's protecting. Jose Molesh is an expert on electricity and finance. Jose, good evening. I mean, it does seem to be an obvious and important point Marakane is making, and he's right to make it. If we want smelters, you and I have to pay for them.
Correct. It's an important point, especially because of where we are right now. We are in the process of reviewing our electricity pricing policy. And what he's saying basically is not to say that the smelters should not be looked at, but he's saying there must be a methodology to doing that. The impact on the economy, the impact on local jobs and all of that. What's the impact on that? Have we done a cost-benefit analysis to be able to determine which smelters, under what circumstances? So basically putting the rules in terms of how we do that and what the benefit is.
Isn't it also the case that smelters are generally owned by private companies? So wouldn't you and I be subsidizing a private company?
Yes, actually, it happens in South Africa, in some countries globally, that there are energy-intensive users that are subsidized. But there's always a consideration in terms of what is the justification for doing that, what is the contribution to the economy, and how the retention of industrial capacity versus just exporting. So that is what is important. Say economically, if we're going to be able to do that, what is the impact? If there is none, then why are we really subsidizing, as you correctly point out, private entities? That is the question.
And I mean, this really then gets to another point. If you're going to do this, it has to be all thought out very carefully so you know what the end point is. You can't just say to everybody, you have to subsidize private companies. You have to be able to show And I think this is where Dan Marakane's other point is important. You need to be explicit about what you're actually doing.
I fully agree with that. You really have to be explicit because this is a historical case, and from time to time, every economy needs to review what they are doing, whether it's still relevant, and what are the levers they are trying to pull. Because at some point in South Africa, we had excess electricity, and we could have lower prices in terms of electricity, and it made sense from our economy to be able to retain these big smelters, to be able to sell that power to them. The context has changed, and therefore the considerations must change.
We're already in a position where many ordinary people tell us they can't actually pay for electricity. And that's actually what's going to really drive the anger here. I mean, the only other way that I could think of to doing it is to have a sort of direct government subsidy to these smelters. But in the end, the consequences for you and I are probably pretty similar.
They are very similar. Government is us. So there's no separate government up there. If they take from the coffers where they are supposed to be doing something else with the revenue collections from us and companies, then there's still going to be a net impact on consumers. So it's really just running away from the problem. We have to define, as Dan correctly points out, the cost benefit, the reason why government is doing it, and how it should be done.
Jose Moleshe, thanks very much indeed, the energy expert. Your thoughts, 072-702-1702.
702. Stephen is on the Money Show.
6 to 8 p.m.
Time to give you an update on the SA Future Trust Summit, and the big prize for a small business is $1 million. There's a big pitch they have to go through, and in fact, our host Ray White is there. Ray, good evening. 3 people, it came down to 3 sort of finalists who had pitched. In the end, there could only be one winner.
That's right, Stephen. That's exactly what happened. I mean, there was fierce competition. There were 10 to start with. That then went down to 3 left. There were 2, Pay Gas, where they went up and said, we got a great product distributing clean cooking fuel and stuff like that. Sonke, they said that automated refill stations, they were good. But the winner of the pitch in 2025 getting $1 million. Now, it's not a cash prize. What it is, it's investment. So the Oppenheimer family, SAFT, South Africa Future Trust, will now work with her on due diligence and stuff like that, just to make sure that the investment works in the right direction, but it is for her business. Now, Meg Fora is the winner of the big pitch for 2025. Stephen, I spoke to Meg just after winning, and yes, I did ask that really obvious question. How are you feeling? This is what she said. Let's take a listen.
Completely overwhelmed, and I'm not really thinking about what it's going to mean for the future. I'm just thinking about how the heck did I get here against those other 9 incredible companies. I think it is important to know that it is an investment, which means we're going to go through a very rigorous due diligence process now, and knowing the Oppenheimers, they will look at our business carefully. I'm not worried. We are highly defendable, and we've got the right mission. But what are we going to do longer term? I think, for me, it's all about rolling out parenting support across every demographic.
And Ray, the app is called Parent Sense. What exactly is it?
Well, that's exactly it. You're probably wondering, okay, what does she win for? What was so dynamic? Well, yes, it's called Parent Sense. Now, Stephen, you know this. You're a dad, and you want a little bubbers as well. I was petrified when I was a father. I didn't know what to do. So Parent Sense says exactly that. She's got a one-stop shop for moms and dads who have just become parents. It covers everything. Quote, it's called the all-in-one app that takes the guesswork out of parenting. It tracks your baby, etc., regarding the baby's health, sleep, playtime, bottle time, all the rest of it. So I asked her, I said to her, what is it actually about? And she had this to say.
So we deliver parenting support on mobile applications, WhatsApp and chatbots. It is all curated by myself, Meg Fora. I'm obviously an occupational therapist, the author of 8 parenting books. So for me, this was a natural extension of the content that I've created over many years. And I've got a team of about 50 incredible experts behind me, from pediatricians to gynecologists, who support me to deliver absolutely really gold standard curated information to parents. The problem with the world at the moment There's a lot of noise out there, particularly on social media, and parents don't know where to turn, and we're that solution. No, we're absolutely ready to scale. That's the beauty of a product like this. It's highly scalable as a digital product. We've built a very firm foundation, so the actual tech product itself is very, very robust. We've got an incredible tech team of all female developers, barring one. So we've got an incredible team who develop our product, and it is ready to go global. We have already got a deal underway in the UAE, and in fact a second very large deal in the UAE, which if it comes over the line will deliver some high touch care as well, so where we can really touch people as their babies are discharged from neonatal ICUs. We've also got a government globally who's looking at our product at the moment, so yeah, we're ready for scale.
Meg Fora there, the winner, this year's winner of the SA Future Trust $1 million Big Pitch. Ray White for that live report. Really do appreciate it. Thank you very much on The Money Show. 10 minutes to 7.
The Money Show with Stephen Grootes is brought to you by Absa CIB, advancing Red Rocket's ambitions with Discovery Green as the off-taker to power Africa's future through affordable, renewable energy.
The Money Show, Tech Thursdays.
8 minutes now to 7 the time. Well, I don't know how much time every day you spend on TikTok. I've managed to not get addicted to that, but I know plenty of people who are, and I know that addiction is out there, so I treat TikTok very carefully. Let me just put it like that. But in the States, in the US, there's been this huge political fight about its ownership, and it now seems that China and the US, do I call it Beijing and Washington? Do I call it Xi and Trump? I don't even know what I call it with the US anymore, have reached some kind of deal, and there will be some American ownership. Siphumelele Zondi, good evening. Man, oh man, did TikTok not want to be in this place where really they're the tug of war between these two economic superpowers? What did they agree in the end?
Hello, Stephen, and it's actually not really clear what the actual agreement, but it seems like what they could be agreeing on is over 60% of ownership of TikTok, specifically in America, not worldwide, but TikTok in America, which means it might have to be registered in the United States of America. 60% will be owned in America. There are going to be 7 American board members for TikTok America, and 6 of the 7 will be American, and 1 will be from ByteDance, which is the mother company out in China.
What I've never got is why this matters so much. I mean, I get the sort of American claim, if I can oversimplify it, is that no, they're changing the way we think with algorithms, or they're getting information on us. I mean, this is what American social media does. I mean, this is what Facebook does all the time.
And that is actually true, Stephen. But when you also think about it, is that it's 149 million users of TikTok in America alone. So if you think about South Africa's population, 60 million, and this is well over 2 times South Africa's population. So that's what it is, which means it's a lot of money, because in America there's also TikTok Shop where people are buying and selling things. It's a business as well. So it's more than just a video sharing app, especially in the United States of America, whereas in South Africa we know it as a video sharing app, and people are not quite making money directly from the platform here. So it's because of that. And I suppose as well there is that influence that who owns the data that those 149 million users of TikTok in America are uploading constantly on the platform, which is Chinese owned.
Well, I mean, if it wasn't Chinese-owned, maybe there'll be a different mayor of New York, Siphumelele. Do we know what this does for people who use TikTok, people who create content for it outside of the United States? Does this impact of any deal on them?
So it's said that it's not going to impact on them. So for people even here in South Africa, it's going to be business as usual, because TikTok outside the United States of America is going to operate differently from TikTok in the United States of America. And also what they've said as part of this deal is that issue of algorithm, because they want the algorithm to be controlled in America by those over 60% shareholders that they're going to have in America. Which means then they can control some of, because they, as you mentioned, that because of the content coming from anywhere in the world, it's been quite difficult to control what people have had access to. And it's been criticized in all sorts of political issues in America to say, well, get a grip on it so people think a particular way.
TikTok is owned by China, essentially. It's Chinese owned, let me put it like that. Is it actually available in China?
It's not. So it's owned by, so it's based on Chinese social media platforms. And that's why, because it already tested it on the massive Chinese population that they have over there. So they basically took the algorithm or the ideas from there, and then they transported that to the rest of the world. But Chinese people don't have access to the TikTok that we see outside China. In fact, they probably don't even know it exists.
Sure. There's so much hypocrisy in this kind of industry. So you've got the United States making demands of TikTok and bullying their way through. You've got people saying, no, but the algorithms could impact us. But that's exactly what Facebook does. And in fact, I don't know if you would have seen it yet, Siphumelele. Reuters had a big story today that Meta projected in the beginning of 2024, it would earn 10% of its revenue from fraudulent ads. So these aren't fake ads. These are scams. In other words, once you pay the money, you never get it back. It's that kind of issue. That was $16 billion. And they went ahead anyway and took money from these things. And now, you know, the United States has got Facebook doing that. And they have the nerve to lecture ByteDance.
Totally, and that's the thing. Is in this world as well. It's also basically who owns the information, who controls information flow, and who's making money. Because when America, because there are also rumors that probably one of Donald Trump's sons, Barron, might be one of the 7 board members when the deal eventually goes through. Because Trump has already signed an executive order on this, and has given them 120 days that it goes through. So yes, it's who owns the information flow, who makes money from these platforms. Because if you have millions and millions of people on a platform, then there's a lot of money to be made. And as you say, whether it's advertising that is done correctly, advertising that is fake, advertising that is done fraudulently as well, someone is going to make the money, but it's where the money is sitting. And America has had an issue here that it's sort of like they've been overtaken in this high-tech information flow that we live in, and it seems like it's companies from elsewhere, not just in with communication tech, but also other forms of technology, and they sort of like want to control it and bring it over to the United States of America, even though it's created elsewhere.
Siphumelele Zondi, thanks very much indeed, our tech expert. I really do appreciate it. I have to just say, the thing about Meta that really staggers me is that these adverts were not just overselling. It's not like they were promising you the world and all you got was, you know, a shabby piece of clothing or something like that. They were proper scams. I mean, proper scams. And they were making money off them, and they knew they were going to do it. And I know Meta will say, well, we have software to do this and do that. But it is astonishing. It is just astonishing, the impact. I mean, I sometimes wonder what the final sort of historical verdict on Meta will be. And of course, none of us will care at the time because we'll be in a world that's sort of been created by Meta. Stop reading dark science fiction, Stephen. Plenty to come in the next little while. We will be talking about top billing, which seems to be coming back. Why it was cancelled, I never really understood. We will also talk about Black Friday. It's not quite there yet, but it's coming. And don't forget Investment School tonight as well. You're with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa CIB, advancing Red Rocket's ambitions with Discovery Green as the off-taker to power Africa's future through affordable, renewable energy. Good evening. Plenty to come in the next little while. It's 8 minutes now after 7. We will be speaking to the SABC. Tembo Gwajela is their Group Executive for Corporate Affairs and Marketing about the Top Billing Reunion Special and how it's working and the new episodes that are coming. Top Billing is just one of those iconic pieces of South African TV. We're black in small business focus tonight. Lonqedo and Twentwe is back. We're talking about Black Friday and kind of hoping that I don't hear any Christmas songs in the stores. Does anyone go to a store for Christmas sales anymore? I just don't have to hear them. I mean, that's one of the joys of online shopping is you don't have to hear that kind of Christmas music while you do it. And then don't forget Investment School. Should you invest in private companies or should you stay with listed companies, and what the changes are that we're seeing? Looking forward to that conversation from 7:30. Good evening.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
So last week, and you may know this already, last week I had to go and get a driver's license card. A new driver's license card. Off I went to where everyone told me to go, which was Waterfall in Midrand. The service was excellent. I was very pleased. Until, on News 24, I read this week, today in fact, that they are trialing a digital driver's license that I would keep on my phone. It took them 3 months to do it. I mean, this is what happens when you get, people who are good with that stuff in a room together and leave them to it. Here's what I don't get. There seems to be a big fight at the moment about whether we should have to get a new driver's license card every 5 years or if it should be longer than that. For some reason, 8 years seems to be the proposal. And I cannot for the life of me understand why 8 years rather than 10. My passport's 10. My ID, it's green, goes forever. Why on earth should it be 8 years for a driver's license card? So I am one of those. Ma'am, Minister Barbara Creasy, if I may, let's just move to digital as quickly as possible, please. We really don't need anything else. Let's just roll it out and get on with it. As it is, I am sure on a daily basis, there are fights with people where the motorist says, I don't have my driver's license card on me. Here is a picture of it. And the cop says, well, I need to see the driver's license. And what's the difference between the two? I can't really imagine. It took 3 months. And we have this machine that's, 100 years old, still clanking them out somewhere. And that nonsense where people went to the wrong country and looked at the wrong machine. Come on, let's just go electronic. We really should not have to wait any longer. 10 after 7.
7:02.
7:02.
Stephen is on the Money Show.
6 to 8 p.m.
Well, when you think of television productions that are South African, right at the top of the list has to be Top Billing, the SABC's Top Billing. It sets a sort of agenda, and I made the joke earlier that, if your wedding wasn't on Top Billing, well, then it didn't really work out for you, did it? And it did have that kind of cachet, I suppose, that kind of reputation. Well, now it's coming back. Themba Gwajela is the Group Executive for Corporate Affairs and Marketing at the SABC. Themba, good evening. You're putting together a reunion show first. What are you looking at doing?
A very good evening to you, Stephen, and to the listeners on 702. We're quite excited about the return of Top Billing, and I think the reunion is the perfect way to bring it back, right, and to segue into what we've got in store for 2026. So we partnered with the guys at Corona to bring back, that reunion episode, which will be live on the 27th at 7 o'clock on S3.
What are we going to see? We're going to see some of the presenters that we know and love from that time. We're going to see if they've changed as much as we have, Tim.
I'd hate for them to think that we say they've changed much. I think they look fabulous. We did have an event, earlier this week in Cape Town where we actually, talked about that, and we had the presenters in-house, the likes of Basetsana, the likes of Fezile, Kize was also Mr. Supranational. We've got the likes of Jonathan Boynton Lee and Ryle Dumoni. So we are definitely bringing back, the familiar faces, definitely for the reunion, and also throwing back, in terms of creating the excitement around what people can look forward to in 2026. I think South Africans have really missed Top Billing, as you've just said.
And one of the things that Top Billing did was it launched a lot of careers. People had their first TV experience there. They became household names as a result. Are you going to sort of be doing that as well, looking for new talent, giving it an airing, giving people a chance?
Absolutely. It wouldn't be Top Billing if it didn't do that, right? I think there's a working recipe in how Top Billing has been, in terms of every household that has really got glued onto that. And we have to keep what's working in that format. Yes, I acknowledge, and I think we acknowledge the fact that the world has shifted in the last 6 years since the last episode. So there will be a bit of newness coming in. But I think there's a lot of key ingredients that really work in the format that have to stay. So, and one of those is definitely how we create superstars and make, new high achievers and talent, as you rightly put.
There's a lot more competition for eyeballs now, Themba. I don't need to tell you that. You know that. And one of the things that really does seem to work in our country and in countries around the world is local content. In other words, talking about South Africans' lives to South African people, right? And we see that with what other streaming services are doing in South Africa and your competitors and all the rest. Where I'm really going with this, though, is that the genius why people watch Top Billing was that it was people they know. It was someone they might see in a parking lot, or it was someone who was in touching distance of their own lives. They're on TV having the wedding that got onto Top Billing.
Absolutely. In fact, we were actually discussing this at the dinner the other day. The fact that what Top Billing afforded people from all walks of life in South Africa was that opportunity to dream, to imagine their lives beyond their current circumstances, and to see that through obviously the experiences of others, and really think that I can be that rugby player, or that famous person on TV that lives this beautiful, glamorous life, but doing that ever so successfully within the shores of South Africa, because we've got so much beauty to showcase in our country. And I think since the departure of Top Billing 6 years ago, I think people have really missed seeing and appreciating how much beauty there is in South Africa.
What made you decide as S3, that's the name of the channel, that this was the right moment to bring it back?
Yeah, look, we have to be a broadcaster that listens to the public by virtue of being a public broadcaster. I think there's been an outcry really for the longest of time for Top Billing to come back. We've got people on TikTok, creating TikTok content using the Top Billing format and drawing inspiration from that. And a lot of South Africans have been telling us it needs to come back. I think it's one of those things that we've listened and we've said, okay, so let's make it happen. And I think in it coming back, we really just bring back that inspiration and showcasing and playing that role in showcasing the best of fashion, the best of, destinations within South Africa, the best of architecture, the best of beauty. All of that, there hasn't been something that has quite captured that as well as Top Billing did. And I think we're closing a gap that really exists, and the market really wants to see that.
It's an important moment for the channel too, isn't it? It's an important piece of merchandise, but it'll hopefully bring viewers, and that's what you need.
Absolutely. I think there's no denying the fact that, content on various channels, has been challenged largely. And Top Billing is one of those pieces that are able to bring a variety of audiences. I was saying to Basatana at the dinner, and we said, much as people may look at a platform like Top Billing and think it's so glamorous and so and it serves luxury, you've got people who get inspired by that and change their entire way of being because they actually see themselves being in that space. And I think South Africa does need something to believe in. Lord knows we've got a lot of challenges as a nation. But just living through those moments and having a sense of hope because you think there's something better that you can do. And I think that's exactly the kind of show. And for the channel then to bring that definitely resonates with audiences, bringing back some of the audiences to S3 that perhaps have been lost over the last 6 years.
Themba, good to talk. Thanks so much. Kwemba Goejela is the Group Executive for Corporate Affairs and Marketing at the SABC.
The Money Show, Small Business Focus.
Well, it feels like a long way away, and you probably haven't heard any Christmas music yet, but it's coming. I can warn you that it's coming. Lonqedo Mtwentwe is the Managing Director at Vantage Advisory. Lonqedo, good evening. Good to see you in our studio. Thanks so much for coming through. I really appreciate it.
Good evening. Good evening, Stephen. Great to be here. Good to see you. Yeah.
In the past, I suppose bigger chains have often been able to dominate during this time. They've got bigger advertising budgets. They've got a bigger kind of presence in a shopping mall.
Yeah.
You're suggesting that smaller firms actually have a lot of advantages now.
Look, Black Friday is a big business, right? And I was actually reading a report from my fellow columnist, Arthur Goldstack. So last year, look, the retail sales were close to over 88 billion.
Yeah.
Right? And this year, we're expecting that to surpass to over 100 billion, right, when it comes to retail sales. But what we're picking up now, because of social media, right, and technology that is actually starting to kick in, now the smaller players are starting as well to have their share on the pie, right? Because what has been happening, SMEs have built very good storytelling. Have built very good connections with the consumers, right? And also as well in the township, we're starting to see some bit of technology innovations that are actually happening where now consumers as well, businesses, SMEs are starting to compete with the big businesses. And in my article, I made reference as well of, some of the technologies that we've picked up, for instance, of SmartFill and Skubu, where basically what they've done, they've plugged in some of the refill stations in spaza shops, right? Where instead of buying certain things in huge bulks, like maize meal or sugar in huge bulks, now you've got these refill stations where you can buy all of these things at smaller quantities. So if you've got 50 rands, you can actually get a very good meal. So all of that now is starting to really push a consumer to say, look, do I really have to wait as well, maybe, or to go to the big players to get all of this if I can get all of these things within my spaza shops within smaller quantities, very good value as well. So all of that now is starting to say, look, the big players traditionally, yes, have made huge money, but we're starting to see SMEs to really come in through, the campaigns that they usually run as well on TikTok. That's quite big when you run your big campaigns, yeah.
In a way, what this technology is doing is that it's helping you to compete. It's making things slightly more democratic. Yep. In fact, The Economist had a big piece saying AI will be the end of what they call the rip-off economy. In other words, if you've got a big mechanic, a big firm that's a mechanic, yep, and they charge you X, you'll be able to find if there's a cheaper deal around the corner from a smaller mechanic. That's what they're talking about.
No, absolutely. Stephen, I work with SMEs on day-to-day basis. Yeah. Right? One of my clients, for instance, had so many stores across Gauteng. She sells beauty products, Gauteng and KZN. So what she did, she picked up to say, listen, most of my sales now are no longer on the physical stores, mainly are online, right? So what she did, she closed all of those physical stores that were basically really heavy in terms of her overheads, now focusing mainly on online. Because traditional, what we picked up was that most people thought that, let me put it this way, access to smartphones has made it easier for people now to shop, right? And therefore, even if you're in township, you're able just to basically log into any platform, you order, the goods will be delivered next to you. So we're starting to see all of that change in a way. It's no longer, as it was before, but you have to think smart in terms of how you also compete as well.
How do you take advantage of this? If you're a smaller firm, what do you need to do? And I'm sure that somewhere there's a kind of touch point with the community. Yep. There's a sort of hyper-local campaign that a bigger chain can't do. Yep. Something along those lines?
Yeah. So what we've picked up when I was doing my research was that most of these smaller individual SMEs, especially within the beauty brands, for instance, what they've done, they've built very good storytelling in terms of the journey of building that business, right? The consumers as well are starting to be aware or to be more purpose-driven, to say, look, instead of me just buying an item just online or shipping an item from Asia, right? I know someone that has built this business from scratch. She uses this money to employ locals, right? This money, all of a sudden, it gets recycled. So therefore, when you build a business or when you try to run these campaigns, that storytelling that resonates with South Africans is what will actually separate you from someone who just log in right now and just buy an item from Europe or Asia, instead of saying, listen, let me just recycle that money and buy from someone that I know is adding value to this economy. Because we keep saying that our economy is not growing, right? And most consumers, and usually what they do, we've picked up that to say, look, instead of now just import, how do we create value in terms of creating our manufacturing capacity, supporting some of the smaller guys that are coming up? So therefore, that's where we're at in South Africa.
Keeping our money in our economy is becoming an important thing. Whenever you buy something from Shein and Temu, the money goes out. Yeah. If you live in a township area and you go to the shopping mall, the money goes out of the township area and into the mall. Yeah. And is that going to start to be, I think, maybe a bit more of a selling point? It used to be buy South African, now it's keep it local.
Look, because of the fact that we've seen how other countries have moved, all right? We've seen other, for instance, like USA, they're intentional about protecting their local economy. They're very intentional about telling their consumers, very intentional about manufacturing locally. So therefore, the only way that will also help us as South Africans is to really educate our consumers, really educate to say, listen, this is what happens when you spend money. The impact in terms of job creation, we've seen that economies are growing. We are growing below 1%, right? So what do we have to do? So we have to educate our consumers about the impact of their spending. And what we're picking up that most of these consumers as well are starting to be very interested in terms of not only the price, but the purpose behind the product, the purpose behind even that business in terms of where it's going. Yeah.
I would imagine for a lot of the smaller companies, Black Friday is actually a huge opportunity because it gives you a reason for your campaign. It gives you a reason to try and get people into your store and wherever it may be.
Yeah. So one of my clients said to me, November is a make or break month for them. All right. And because of the fact that weekend everyone wants to spend, that month is bigger than even some of the business for December. Because December sometimes can peak or sometimes can low. January becomes a slow month. So most of the SMEs right now are really starting to implement and really to strategize in terms of how they're going to make or survive, the Black Friday. So if you're in retail, especially if you're in retail, that month is a big month for you.
Yeah.
Right. So if you haven't planned for it and you have to start actually now, we know that it's close to end of November, but some of the business have already started in terms of how they're going to make money around that time, how they're going to really spin some of the products around that. So it is a big month for SMEs.
Lungcedo, thanks very much indeed for coming in. Really do appreciate it. And such an interesting comment. Lungcedo Mtwentwe is the Managing Director, Advantage Advisory, on Small Business Focus on The Money Show this evening.
The Money Show.
Investment School.
23 minutes now to 8, time for Investment School on The Money Show. Tonight, this evening, we're talking about private assets and how do they fit in terms of the investment opportunities that are available to you. You know, of course, our stock markets work, but private assets, in other words, unlisted companies, are something very different. Chantal Marx is the head of equity research at FNB Wealth and Investments. She's sitting opposite me in the studio. Asanda Notshe is the chief investment officer at Mazi Asset Management. Good evening to you both, and thanks so much for agreeing to do this. I really appreciate it. Asanda, let me start with you. So we're used to Stephen going on about what happened on the JSE today. And those are public companies. What would be the key feature of private companies or private assets? Asanda Notshe, I'm not sure if you're actually with us at this point. All right, we'll sort that out. In the meantime, Chantal, what for you would be the big difference between the two?
So the you said it in your introduction as well. The one is publicly available. You know, you get all the information. You get pricing information every single day. Access is quite straightforward. Private assets are more difficult to access, particularly directly. If you're looking at a private equity vehicle, they'll have lots of different companies in there. A company like Starlink, for example, is a private company. A company like Neuralink is a private company, but these are companies that we hear a lot about, but you cannot buy it on a stock exchange. Price discovery is very difficult because you don't have daily trading in the shares of these companies. And it almost works exactly the same way for something like private credit or an infrastructure investment, for example, wanting to invest in a specific toll route.
Okay, so basically the big difference is there's a huge difference in the information that you have about them.
Yes, and I think further differences would be the risk profile. It'll be slightly more risky because you don't get that kind of daily price clearing, because you don't know exactly what the price is and what there's not a lot of people looking at that specific asset. It can be more chunky in terms of that valuation. And then I think the way that it's regulated is also different, because when you look at how a public company is regulated by the JSE, for example, it will be different when you're looking at private equity.
I'm going to come to that in a bit more detail in a moment. Asanda Notshe, good evening. I understand we have you now. If you have so much more information about public companies, why as an investor would you want to look at a private company when you obviously have so much less information about them?
Yeah, thanks, Stephen, and glad to be here with you. Good evening to everyone. Hi, Chantal. I think, some of the reasons that are sometimes given, or some of the observations, are the returns that are associated with those assets. So, there's actually an interesting case last week, actually, a company called, not just this week, called Optasia that listed. And, it listed from having been private, where presumably some of the investors that came in early there might have gotten, some better returns or higher returns potentially, just given the startup phase and as it was, the company was sort of ramping up and getting scaled versus perhaps what one might expect going forward. So not to say it's a bad company. I think it'll still deliver very good returns. But I think some of the features, as you say, Stephen, are for the most part it's returns. But I think there's also the element of maybe sometimes unproven business models or things that are more of a venture sort of nature, where there's still uncertainty around how the business model pans out, how the the business will actually sort of progress and will it succeed or not, versus, business models that are well known, a bank, we kind of know how it operates. And so that's more well accepted or well understood as an operation.
Okay, so is it as simple as saying, Asanda, if I come up with an idea, let's just call my idea XYZ. No one knows what's going to happen. So I'm going to go to Asanda and Chantal and I'm going to say, invest in my company. I'm not going to list it, and invest 100 Rand, and you might lose 50 Rand of that, or you might end up with a company where your share is worth 1,000 Rand each, because it's at such a new stage. Whereas if you go and try and do that with ShopRite, yes, their share price might go up and down, but they're such a mature company, it's not going to expand at the same rate.
Yeah, absolutely. I think, a lot of these what they call some in the private asset space, unicorns, so companies that have expanded and have grown from absolutely nothing to billions of dollars in valuation. A lot of these things have come up from exactly what you're saying. So, you think of something like Facebook, social media didn't exist, sort of whatever, a decade or a half ago, whatever it is. But it's something that we are all now well versed in and interact with and use. AI is a very good example where, OpenAI is not a listed entity, but it started from somewhere where somebody had an idea and thought, it would be a good idea, brought some investors together. But it would have been difficult for that idea to be ventilated in a public space because, again, there's all sorts of maybe expectations. What do the financials look like? What is the history in terms of the performance of that company? And all of that stuff is not available at maybe its inception. I think also you might find instances where, interesting cases where, listed companies might embark on new ideas or things that are, or maybe invest in things that are not known just yet, because they can maybe see that there's an opportunity or something that's maybe in their value chain which might be interesting or disruptive. So that's also another angle where people who maybe have got some knowledge of the space might see potential, and that's where your VC investors and the types sort of come in.
Chantal, I can go online, not now because trading's closed, but I could go, find a way very quickly to buy shares in a company on the JSE. And once I had a trading account, there were all sorts of things I could do. It's obviously very different for private companies. It's much harder to get any of the action. How do you go about doing it?
Yeah, so if you want to invest directly from a venture capital perspective, startup investing, you'll have to get involved in kind of like an angel investing network, which is quite complicated. But for the everyday retail investor, I think the best way is probably to look at listed private equity companies. So there are large ones, particularly globally, that you can invest in. Private companies like KKR, or private equity investment companies like KKR, Blackstone, for example. There are a few examples of those. In the South African space, we've had a few, but they didn't do particularly well. African Rainbow Investments delisted a few months ago that's exactly what this company was actually offering investors, a liquid entry point listed on the JSE, but investing in private equity or private companies. You can also look at unit trusts. I think in the global context, it's more widely available. Something like an ARC Venture future ETF where you'll have access to a Neuralink and an OpenAI and a SpaceX, for example. So, I think that there are different ways. When it comes to other private assets, lots of infrastructure funds listed as well, exchange-traded funds and unit trusts. Unfortunately, just in the South African context, we don't really have a lot of that available.
Asanda, you clearly have to do a lot more homework than you would on the JSE. I mean, for lots of reasons. You have to do a lot more discovery, if that's the right word.
Absolutely. So I think Chantal mentioned it earlier. In the public space, companies undertake to provide information, regular updates, audited financials, and need to follow specific guidelines as far as how they interact with the public. So, information needs to be made available to everyone, sort of no selective disclosure and things like that. Even, things like being monitored by the FSCA in terms of insider trading and so on. So contrast that with, the private space where it's effectively, I think, if we take it to its bare bones, it could be a bunch of us sitting around the braai and saying, guys, maybe we should start a business X and Y. And so from that point, there's no regulation or nobody who's overseeing that enterprise as it starts. There's nobody who says, look, you need to disclose to person X, Y, Z, or to everybody, information about your company. And that's why I guess it's private at that point. And so investing in such, it really needs you to, as you say, undertake like significant due diligence, understand it quite well, because unfortunately there aren't those protections. And that's why also I think from a regulatory perspective, these are, I think the regulators are sometimes concerned about what people get themselves into. You often hear about these Ponzi schemes and things like that. So there is then reasons why you need to have investor protections, just because the information is not as easily available.
Chantal, regulation here is very important and obviously nowhere near as tight as the JSE.
Yeah, so if you think about a private company, they still have to, for example, report appropriately to the tax authorities, right? But you don't have the JSE rules that are governing the way that they're trading, and you don't have the same kind of level of regulatory oversight. That is why the vehicle that you choose to invest through is so important, because if you are going through a private equity company that invests in lots of different private companies, those companies are listed, so they will be subjected to those types of rules and that type of oversight. Similarly, an exchange traded fund or a unit trust has a very strict regulatory regime to which they are beholden. So I think that really will help. The same thing when it comes to private equity and infrastructure. If the vehicle that you're investing through is regulated, you are protected to a certain extent. It's a lot riskier to go at it alone, to say, I know this guy and he's starting that business and I think he is great and his idea is grand and I'm going to put 10,000 Rand into that business.
I suppose the fact is, and we can't get away from this, Chantal, there is more risk here.
Yes, absolutely. So I think one of the other reasons I also like a kind of a pooled investment, so going for a company that is invested in many different companies, or an exchange traded fund or unit trust that does the same thing, it diversifies your risk across these different holdings. You won't just be exposed to one single company. And even within that, I would suggest that it not make up the bulk of your total investment portfolio. It's potentially a really nice sweetener. It's got a different risk return profile, so it's a good diversifier. But it shouldn't be the only thing that you hold.
We're speaking to Chantal Marx, Head of Equity Research at FNB Wealth and Investments, and Asanda Notshe is the Chief Investment Officer at Mazi Asset Management. We're looking at private companies versus public companies on The Money Show on Investment School. It's 10 minutes to 8.
The Money Show with Stephen Grootes is brought to you by Absa CIB, advancing Red Rocket's ambitions with Discovery Green as the off-taker to power Africa's future through affordable, renewable energy.
The Money Show.
Investment School.
Chantal Marx, the head of equity research at FNB Wealth and Investments. Asanda Notshe is chief investment officer at Mazi Asset Management. We're talking tonight about private companies versus public companies and when you should invest in which. It's 8 minutes now to 8. Asanda, is liquidity an issue? In other words, so yes, you come across companies you want to invest in, you have ways of doing that, but the shares are not traded nearly as often as they are in the public space. And does that mean that if you wanted to sell them suddenly, or if you just wanted to get into them, it's actually much harder than it would be otherwise? Liquidity is a big issue here.
Absolutely. And I think one of the sort of the key hallmarks or differences between private companies and those that are that are public is that ability to make or be able to either buy and sell shares. So it's not just about the buying or effectively also the selling. So yes, I might be able to come across somebody who's got a great idea, and I get in knee deep, put my money in. All of a sudden, I need the money for something else. Not so easy to exit because the shares that I hold are not publicly traded. So a stock exchange is effectively a market that enables buyers and sellers to come together. They don't need to know each other. They don't need to be in any proximity to each other. So, it could be somebody who's across the world that I'm buying shares from or selling shares to. Whereas in the private space, I probably need to sit down, negotiate with somebody else who might be interested in buying the shares. Then we're going to have a haggle around the price. Then we need to sign share register or sign over the shares to the person. But I think I want to maybe just add, Stephen, that in terms of I think if I look at investment philosophies and maybe the ability of an economy to invest and find new ideas, find innovative ideas, move countries forward in terms of technology or even just investment in new ideas. The private space is actually quite essential. There's somebody was saying to me the other day, in America, there's the saying goes, there's money for every idea.
Yeah.
I.e., if I come up with an idea, somebody's is got the appetite, the mindset, and the philosophy, or even just the culture of investing in these things. And that's why you then have them coming up with all manner of fantastic ideas and things that we now see in the rest of the world. So I think yes, there are those difficulties with private investments, but I suppose as a society, it's maybe something we need to think about, talk about more, and see how we can perhaps open that up as an avenue to ourselves, because that's actually how we're going to fund entrepreneurs who come up with great ideas, and that actually moves our economy and our country forward.
I always find it amazing. Americans are prepared to take risks, and the rest of us aren't. And there's so many interesting reasons as to why that may be. Chantal, as part of that, you would also then look at impact investing, because that would be something very much in the private space. We're going to invest in this because we think this is going to change the world for the better.
Yeah, and I think if you consider venture capital and angel investing specifically, it really does result in a better outcome from a societal perspective if you are an early stage investor, because you are actively participating in promoting new ideas, developing new businesses, and by extension, job opportunities. So I think that it really can have a massive impact. And even in other kind of private asset spaces like infrastructure, we know that the multiplier effect of investing in infrastructure is massive. By multiplier effect, I mean that for every rand you spend, 3 rand goes back into the economy ultimately. So yeah, I think impact investing plays a huge role. And when you are looking at buying these private assets directly, when investing in a private company, it must also align with your kind of personal philosophy as well, not only your investment philosophy, because you are probably going to be with this company for a very long time and be a little bit more involved than you would be otherwise.
Do you get to play more of an active role in talking to management?
I guess it depends how big you are as a shareholder. So it's very similar to a large listed company in the sense that the big shareholders have the big say. And I think that the same will be true in the private company space as well.
Asanda, we sometimes see, it looks to me almost like we see a bit of a pendulum swinging back and forth here, where companies kind of go through a phase of delisting from the JSE and then suddenly you have a lot more companies listing. Is there anything that makes a trend? Is there no trend at all when it comes to that? I know the JSE's been very worried about it, but is there something that sort of leads to a season, if I can call it that, of new listings and a season of delistings?
Yeah, it's very interesting that, for various reasons, companies will cite, or some companies will cite different reasons for maybe wanting to list or delist. Some companies will say, for instance, delisting from the JSE. Chantal mentioned African Rainbow Capital. So they said, look, this market is not assigning or ascribing the correct valuation, to their business. And so, they think that it's not worthwhile because they can't raise capital at the right price. Whatever capital you may raise on the market, it makes it, dilutive for existing investors because you're going to issue shares at a much lower share price than what they think the company is actually worth. Other companies will say, if I look at South Africa, it's probably, from an emerging market perspective, it's a liquid market. Money can come in and out in terms of, international investors. There's regulation. There's a large pool of capital that's available, that comes through the JSE. So I think it very much depends on, I suppose, let's say the outlook of a company, the phase in which it's at from a developmental perspective in its own growth and so on. But I think definitely, price discovery, the valuation that the market ascribes, the interest and the level of involvement and support that a company can get on the public market, that all plays a role in terms of the attractiveness, in terms of the company's sort of willingness to be public or not.
Asanda Notshe, thank you. Chief Investment Officer at Mazi Asset Management. Chantal Marx, Head of Equity Research at FNB Wealth and Investments. Thank you very much indeed for coming in. Both of you, thank you very much indeed for being a part of Investment School on The Money Show.
The Money Show with Stephen Grootes is brought to you by Absa CIB, advancing Red Rocket's ambitions with Discovery Green as the off-taker to power Africa's future through affordable, renewable energy.
Lots of red, I'm afraid, in the US markets. The Dow Jones is down 0.94%. The Nasdaq down 1.78%. The S&P 500 1.09% at the moment. We were talking about a correction earlier in the week. A correction's gonna come. To paraphrase a terrible song. Well, that's the Money Show for tonight. We're back tomorrow. Good evening, 8 o'clock.